Welcome back to another episode of your Digi Hustle News. As always, I am Wade Teamer. The Olympics, much like the Super Bowl, is a worldwide event that often details the sentiment of nations. This year was no different. Reports are saying that the digital yuan is being used more than Visa at the moment, and that means a lot. We will break down the reasons. Also, we will discuss the newest details given by SoFi CEO Anthony Noto about the sentiment of institutions after their spectacular Super Bowl performance. I'll just say, guys, our suspicions were correct. Then we have some XRP and XLM news. Although these stories aren't correlated, when you look at the macro perspective, guys, it all makes sense. But first, we got to jump into the charts. So it's been a couple days since we looked at the charts, I know, but things are still looking positive, guys. Even though on the daily we are in the red, the weekly as well as the monthly, guys. Let me reset that. The monthly and the weekly again are looking absolutely beautiful. But what's telling the story for us today is, of course, the intraday, guys. We're talking the 3-hour and the 4-hour. Now we're going to start with the 4-hour because I want to show you the beauty of these processes. The 4-hour chart is starting to pull back to that moving average indicated by our red line here. Now you can see this wick on the price chart. We've already made contact with that moving average. That's why on the 3-hour, you can see that the price is already starting to go the other way. This is going to be followed by the 4-hour time frame. You can see here with our RSI, we are now sitting snugly on that moving average, and by the time you see this video, we could have begun to move the other way, guys. So we have uptrends on the 3, uptrends on the 4-hour. Did those backwards, but you see what I'm saying. We have uptrend on the daily and the weekly and the monthly, guys. So the market itself is still positive. Now I want to tell you guys why we didn't look at the charts the last couple of days. The Super Bowl was it for me. I knew from that day forward we were going to be on a rocket ship that will take us to at least 50K, 51 being our weekly resistance. On top of that, the news was positive. Coinbase is going to be dropping at least 10 million tax returns into the ecosystem over the next couple of months. Now, this all lines up perfectly with two very important things. One, the market cycles. I expect this rally to last at least to the end of March, right around the time of that Fed meeting. Now, we could get good news from that, which could push us further. But then we still have to think about the May walk away. Secondly, tax season ends in May as well. So sell-offs in May could be crazy, especially since millions of people probably 3x their tax returns. Needless to say, guys, we didn't look at the charts last couple of days because the fundamentals of the market were just way too strong, but that's a good thing. So more long-winded TA, but needed to make these points, guys. So now let's get into the news. Really quick, guys, want to bring your attention to a couple things. One, SEC enforcement of Wonderland could drastically affect DeFi. That's the headline. On the surface, it's likely due to the fact that they ran up liquidity so fast in what they themselves, Wonderland, called an experiment. Now the SEC is getting involved. Again, we have to zoom out here. We know about problem, reaction, solution. Wonderland was the problem. The reaction was a massive loss of funds, positive morale around Wonderland, so forth and so on. Then the SEC comes in, uses this as an example for the entirety of DeFi. Pretty much what I'm saying is this is a small piece to a much larger puzzle that we will see take form as the year progresses. But I bring this story up again to remind you guys about the dangers of this space. Next, NFTs are the new entry for New York's top social clubs. According to Bloomberg, some of NYC's top social clubs are now using NFT tech for memberships. This right here is what NFTs were made to do. And think about this, guys. These are high net worth social clubs. When I say high, I mean up there, really up there. Politicians, entertainers, athletes, all of the elites frequent these social circles, which means that the elites of the world are using NFT technology for the purpose intended. This also means that a trickle-down effect is surely around the corner. Let's turn our attention to SoFi and the institutional sentiment after this year's Super Bowl. For those who may not be familiar with SoFi, SoFi is a personal finance platform that has taken the world by storm in a very short amount of time compared to other fintechs in the space. So much so that they got the naming rights to the newest stadium in LA without much public notification, as far as I'm concerned. But after the event, Anthony Soto is continuing to push the digital narrative, noting that companies that don't adopt crypto will be left behind. In a quote, he stated that if you don't innovate and use cryptocurrency as a technology platform, you will be left behind. Your business will be smaller. You will be less competitive. You will have less innovation and less of a value proposition for your consumers. He continued to state that SoFi is invested in many blockchains, including Bitcoin and Ethereum, but they also mentioned that they are holding a number of altcoins that they wouldn't mention by name. This revelation comes after FTX US President Brett Harrison revealed that many conversations are happening at the top about crypto integrations, specifically around pension funds and big banks. They also stated, and I really like this one, that more and more institutions are looking at altcoins for their utility. So we have a convergence of scenarios happening here. Regulators are coming in to clear the way for these massive corporations. And I think we are one step closer to that than we realize. On the subject of regulations, Gary G has made headlines once again, this time in regards to Ripple and the most recent Bitcoin ETF proposal. On the subject of the ETF, he stated that the regulatory infrastructure isn't in place yet to prevent wild manipulation through that supposed ETF. Gensler's position is one of, hey, just come and join Death Row. You'll be okay. But the reality, I feel, is something more, as it always is. SEC and the CFTC are essentially playing hot potato when it comes to who regulates what while they figure out their larger plans. Now, as far as Ripple is concerned, the biggest issue there is the promotion of Ripple in the early days. To them, it was promoted as an investment vehicle and not a utility token. That's their whole stance on this. However, here's the truth of the matter. Ethereum did the same thing. As a matter of fact, guys, I have seen some early meetings for Ethereum's token sale. I have that file stored on my computer. My much larger piece on the history of crypto in general will shed light on this moment in time. The deeper I look into this, guys, the more I see the shell game playing out. All I'm going to say here is that all cross-border payment providers have to be on ISO standard by November. Now let's talk about XLM and Ukraine, of all places. This is something that I have been seeing play out behind the scenes for the last few months, guys. Here's what I'm talking about. First, let me remind you that last year, XLM signed a deal with a major cybersecurity firm in Israel. I know that's not the Ukraine, but the mainstream narrative about tensions between Russia and Ukraine often hint at cyber warfare. At the exact same time, Stellar has been sitting in the Ukraine for well over a year now, working on Project Hervinia, which is a governmental digital currency project, not officially a CBDC, not yet anyway. Regardless, the digital currency Stellar is developing with the Ukraine is going to be used for municipal purposes. Seems like a perfect use case if a nation was to go into a conflict with a much larger nation. On top of this, guys, I am seeing headlines like this that state that Ukraine is using crypto to bolster its defenses. All the while, Stellar Lumens is sitting so comfortably in the Ukraine with the solution to the problem. But what's the reaction in this story? The invasion? There's a lot of that too in the headline, stating that it could take the markets down. Well, I personally think the opposite could happen. Maybe some shitcoins will fall off, but that's to be expected. However, if news gets out that Ukraine has been actively using Stellar Lumens to move Bitcoin or even XLM into Russia to support their troops, the media is going to have a field day. And Stellar's new automated market maker can actually handle that volume, as well as their Starlight upgrade. All of that gives them ability to support an entire nation. And can't forget about MoneyGram either. So, guys, we're going to close out today's episode with some real conscious game. Much like what happened with the Super Bowl, the Olympics this year had the exact same mission: to show the world that the age of the dollar has ended and we are now in the age of digital finance. Because according to the People's Bank of China, participants, visitors, and organizers could be spending more than 300,000 yuan daily. This news comes only days after digital yuan transactions reportedly ended Visa's 36-year Olympic reign. Now, here's where it gets even more interesting. Foreigners are using the government hardware wallet to use their digital yuan. Foreigners meaning that participants and guests from nations around the world are now on the digital yuan network. This also means that their data now belongs to China. And if they ever use those hardware wallets anywhere else in the world, China will have that data too. Further proving this is the ATM set in place by the Bank of China for international guests. Now, honestly, I couldn't even tell you what the medal count is right now, because the biggest story coming out of the Olympics is how China is trying to use the digital yuan to take power from the US dollar. Let's not forget what year it is. In China, it's the year of the tiger, and that carries weight globally. Might even be the reason why the Bengals lost, as a way for America to tell China to, ram it, whatever, knowing that they are far behind in this technology revolution. Last year, China removed all of the miners. Most of them came over to the US, and now the United States is catering to miners when it comes to regulation. But how will they respond when someone shows up in the United States and starts buying real estate with the digital yuan? If you found value in this video, don't forget to like, subscribe, and share this information with friends and family. If you're new to crypto, I have links to the most notable exchanges in the description. Using the links below supports the channel and comes with special bonuses for members of our network. For more information on the new economy, check out the playlist related to this episode on the right and our most recent episode on the left. As always, have a great day, have a prosperous day. Most importantly, we making this money. I'll see y'all in the next one.